Monday, August 29th, 2016. Maneco 64 here, home of alternative economics and contrarian views. It's around just gone 10 a.m. London, so 5 a.m. New York time, Eastern Standard Time, so still quite early. I like to cover the technical picture for gold, silver, and Bitcoin, and a little bit on the fundamentals as well towards the end. So yeah, just to let you know where we are right now, gold is at 1390.50, so it's down about $1.50. Silver is 1856, down about 8 cents, and Bitcoin we are at 573, so down about $3 from the previous close. So I'll start with gold, with technical analysis of gold. And I've got this chart here. It's a weekly chart of gold. You can see that there's a good upward trend line coming through since the low in December when the Fed first hiked interest rates. And then, we moved up almost in one go towards 1280. And then we corrected back down towards 1200. We didn't really quite get there. And then towards the beginning of May, we tested 1300. We got to 1303.80. That was the high in the beginning of May, and that was the first time, well, in the last 4 years at least, or well, not last 4 years, but since the bottom of the gold bear market in December. That was the first time we went back above 1300, and it didn't stay there for too long, as you can see, and it came back down and retested the 1200 level, which, if you look at before December, was almost where the high was. So it's almost like we tested that breakout. And since the beginning of June, it's been, a one-way move, quite volatile, of course, with Brexit. But we got up to 1375. And since, beginning of July, gold's been basically consolidating and correcting back down. That trend line you've seen going through the consolidation period, that's the high from 2011, the 1921 high, and the high from 2012, which was around 1700. So you can see that line is being quite important in terms of the trading in gold. And one thing I like to say, as it looks like we could, go back down to 1300. We're quite close, but that wouldn't be the end of the world. It's just testing, the previous breakout resistance, which was 1303.80. We have a couple of lows here around 12. Yeah, lows from July. They're around 1210, 1212. Today we got down to around 1215 so far. So yeah, gold. So in my opinion, this looks like a staircase formation. Up, and then we come down and retest like the previous big resistance, and then we go back up and make new highs. So if we go to 1300, I'd be surprised, if we go too much through that level on the downside. So I'm quite positive, and this is just a normal move in the bull market. Let's get to silver now. Here's a chart. It's a daily chart. It's a little different than the gold chart, but it's doing exactly the same thing, like a staircase formation. You go up and down, but always higher highs and higher lows. You can see, in March we tested 16. The high at that time was around just above 16 in the middle of March, and then we came back down and we traded towards 1580, which had been an important resistance back in December of last year, thereabouts. And then we've made, from April to the beginning of May, we made a big move from 15 to 18. The high there was 1801, and then it corrected down towards that 16 level, which had been the high in March. And then from then we made a huge, quite a big move all the way up to like just above 21 in the beginning of July. We've been consolidating. We've broken down a little bit in the last few weeks. And, we're 1856 at the moment. I wouldn't be surprised if we trade down to test 18. It could even go a little bit below 18, but I would expect that to be a huge support. And from there, I would expect silver to resume higher. So that's the technical picture in silver. Now, Bitcoin. Bitcoin here is a weekly chart. The trend still looks positive. Since September last year, we had that meltdown, flash crash beginning of August. It traded down to like 481, but 500, which was the November high from last year, seems to be a pretty big support right now. Looks like we need to break above 600. If we can break above 600, we could see Bitcoin motor ahead. As of now, though, it's quite steady and consolidating, around the 570 area. In terms of fundamentals for precious metals, I like to say one thing. If you think central banks have everything under control, that monetary policy is going to go back to how it used to be 10, 15 years ago. If there's no debt problems in the economy, if there's no political uncertainty, then I would say, yeah, fundamentals would be really bad for precious metals. But that's not the case. We had this Fed meeting in Jackson Hole, and one of the things that I noticed is that the more they talk about raising rates and they don't do it, the more credibility they lose. And it seems like they're looking at the numbers week to week. So a central bank that can't determine, long-term policy, because they have to look at the stock market or data from week to week. It's a central bank that's totally uncertain. And that's just the Fed. The other central banks, they're in even deeper trouble. The Bank of England had to announce more QE. They've cut rates to almost zero now. At a quarter, they're going to cut probably again. And that's not to... and the ECB and Bank of Japan are even worse. They've got negative interest rates. And the other thing that I noted in a Zero Hedge story about Jackson Hole is that there was a Princeton University economist, Keynesian, who was at the symposium at Jackson Hole, and he said, apparently this is what Christopher Sims said, and I quote, "Policymakers were told that it may take a massive program large enough even to shock taxpayers into a different inflationary view of the future." And it goes on to say, fiscal expansion can replace ineffective monetary policy at the zero lower bound, Sims said. It requires deficits aimed at and conditioned on generating inflation. That's debasing the currency. The deficits must be seen as financed by future inflation, not future taxes or spending cuts. So that's how desperate these people are getting. If they're talking about this, it means they're going to, if they can't destroy the currency by printing and QE and zero rates, they're going to do it through government deficits. I wonder what the Germans are going to think about that, or the European Union, whatever's left of it. In the UK, it's not a problem because we've been running huge deficits for the last 8 years, and we're nowhere near balancing those deficits, and our currency has been debased with the excuse of Brexit. So yeah, there you go. The fundamentals are still good for gold and silver. So yeah, if you think things are honky-dory, that there's central banks have everything under control and rates are going to go back up to like 5% and everything's going to be normal, then you sell gold and silver, and Bitcoin. But I don't think so. So things are still technically, we might see a little more weakness but the charts look fairly positive to me. They're still going up from the lower left-hand side of the chart to the upper right-hand side, which is positive. So if you enjoy my analysis and my videos, please like, share, and subscribe. If you'd like to donate to my channel, you can donate via Bitcoin, via fiat money dollar. Unfortunately, that's still around. The links are below in the description. So yeah, take care. Goodbye.